Today, we're diving deep into a company called Protean E Gov Technologies. Now, this is a company right at the heart of India's digital backbone. We're talking about critical stuff like PAN cards and pensions. But here's the twist. This digital fortress is basically under siege. Its stock has cratered, and there's a serious crisis of confidence. So what's the deal? Let's get into it.
And this number, right here, is really at the center of the whole puzzle. Out of a possible 10, the investment memo we're breaking down gives Protean a final conviction score of just 4. For a company that's so essential, so foundational, why such a low score? Well, that's what we're here to unpack.
Right now, Protean is a story of total contradiction. I mean, on one hand, you have this indispensable player in India's digital infrastructure. But on the other hand, its stock is sitting at an all-time low. And the cherry on top, the CEO just resigned. This company isn't just in a tough spot, it's truly at a crossroads.
And this slide right here just captures that contradiction perfectly. Just look at these scores. Business quality, strong. Financials, great. The forensic score, perfect. But then you glance over at the market-facing scores, valuation and technicals, and yikes, they are incredibly weak. The market is absolutely punishing this company, even though the business itself looks rock solid. We're going to figure out why.
Okay, so first, let's peel back the curtain a bit. Let's look past the scary headlines and see the powerful, stable business that's hiding in plain sight. This is the fortress, the foundation of the company that makes this whole situation so fascinating.
So the first thing you have to understand is its sheer dominance. Protean isn't just a player in its key markets. You practically is the market. We're talking a 59% share in PAN cards, and get this, a staggering 98% in central record-keeping agency services. That's the core infrastructure for India's entire pension system. This isn't just a strong position, it's deeply entrenched. And that, right there, is what investors call a wide moat. Seriously, think of a castle with a massive moat around it, making it almost impossible to attack. For Protean, that moat is its regulatory position and the powerful network effects that come from being the go-to provider for the government. It's a huge, huge competitive advantage.
On top of all that, the company is sitting on a giant pile of cash. We're talking about 800 crore rupees in cash and cash equivalents. That gives it incredible financial stability. It can weather pretty much any storm and invest in the future without needing to borrow money.
And it's not just about the cash they have, it's about the debt they don't have. The company is virtually debt-free. A debt-to-equity ratio of practically 0, that's a massive sign of a healthy, well-managed balance sheet. This fortress is built on solid rock.
And to top off all the good news, a deep dive into its financials comes up totally clean. Strong cash flow, 0 promoter pledging, basically no major red flags in the accounting. So let's recap. A dominant, debt-free, cash-rich business with clean books. Which brings us back to that big question. Why on earth the 4 out of 10 score?
Well, because there's a serious storm brewing. So now we're going to pivot from the company's strengths to the severe headwinds that are causing all this pessimism in the market. The fortress might be strong, but the siege is very, very real.
And here it is, the stark reality. The technical trend for the stock is strongly bearish. It hasn't just drifted down, it's plunged to an all-time low, trading way below its key moving averages. All the momentum is pointing straight down.
So what's causing all this pain? Well, it really boils down to 4 key drivers. First, and this is the big one, the recent resignation of the managing director and CEO. That's created a huge leadership vacuum. Second, big institutional investors are dumping their shares. Third, like we just saw, the stock is at rock bottom. And finally, believe it or not, even at this low price, a lot of people think it's still overvalued. Let's dig into that institutional selling, because this is important. We're talking about foreign institutional investors, or FIIs, often called the smart money in the market. And look what they're doing. Their ownership has dropped from over 7.5% all the way down to under 4.5%. When you see the big, informed players heading for the exits like this, it's a major red flag for everyone else.
And this quote from the memo explains a really tricky paradox. How can the stock be at its all-time low, but still be considered overvalued? Well, the answer is that the market has fundamentally changed its mind about the company's future. With all the uncertainty, what investors think the company is worth has fallen even faster than the stock price itself.
Okay, so you have this intense battle going on, right? A super strong business on one side and a deeply skeptical market on the other. Where does Protean go from here? Well, the analysis lays out 3 very distinct possible futures.
This is it, the million-dollar question on every investor's mind.
Is the fortress going to hold up against this storm, or are the walls about to come crumbling down? Let's check out the scenarios.
The analysis maps out 3 paths. The most likely one, with a 50% probability, is the base case. Things just kind of chug along, and the stock eventually finds its way to around 700 rupees. The bull case, with a 30% chance, is where a new, dynamic CEO comes in fast and reignites growth, potentially pushing the stock toward 950. But there's also a 20% shot at a bear case, where the leadership mess continues, projects stall, and the price could drop all the way to 450.
All right, so after weighing the strong fortress against this violent storm and looking at all the possible futures, what's the final verdict? What's the actual actionable call here?
And the decision is pretty clear. This one goes on the watch list. The memo basically concludes that the short-term risks, especially that leadership vacuum and all the negative momentum, are just too high to jump in right now, even with all that long-term potential. It's a classic wait-and-see situation.
And this slide just sums up the whole conflict perfectly. It's a tug-of-war. On one side, you have these powerful potential catalysts just waiting to happen. A new CEO, a big new contract taking off, those institutional investors coming back. But on the other side are these critical risks that could sink the whole thing. That leadership void dragging on, more FII selling, you name it. The future of the stock really depends on which side wins this fight. You know, to put this all in context, the memo draws a really interesting parallel to a famous case, Infosys, back in 2014. They were in a very similar spot, a great established company facing tons of market doubt during a big leadership change. And what happened next? They brought in a strong new leader who totally turned things around. It shows a possible path forward for Protean, but everything, and I mean everything, hinges on finding the right person for that top job. And so that leaves us with the final, critical question. You have a fortress-like business that's covered by this deep cloud of uncertainty. Is this a classic value trap where the cheap price just lures you into a situation that's only getting worse? Or is this the beginning of the turnaround story of the year, just waiting for that one spark, that new leader, to bring it all roaring back to life? The answer is yet to be written.